So now I got all of the trades marked up that I ended up taking on July 12th, which was 3 days ago. So that was on Tuesday. All right, so Tuesday, I was trading US30. All right. And on the Sunday call, I was saying that we can, I'm still in rewind mode. So I was saying that we could definitely expect a drop out of the market. And the reason as to why was because if you look here, we get a lot of wick rejection. Right here where the market was at. And I was waiting for it to break out of this zone. But I had already pointed out that we had ended up getting a lower high right here. Go to 1 hour. We had ended up getting a lower high from here to here. So from here to here, we was already getting a lower high. So I was pretty much expecting for this trade to sell, but I was waiting for it to break out of my zone before I hopped in this sale. Right? So outside of this gray zone right here. I was waiting for the market to break out of this gray zone before I hopped into that sale. So we knew the sale was coming all week. I was expecting the market to create a very big sale. We just didn't know when it was going to trigger. And we were waiting for more confirmation, right? So we started off the week being patient. And we actually ended up winning our first US30 trade, which was right here. So we won our first US30 trade right here when it came back and retested it, and we only went for 84 points. So we only went for 84 points. I believe I got it at 31,167. Just double check so I can be right. Tell y'all the right stuff. Yes. One entry I got out at 31,167 and the other one was 31,168. So I got out right around this area right here in the first sale off of the retest. We entered right here on this candle and it sold down within the next hour and hit our TP. Then it came back up and filled in this gap right here. So it kind of came up right here to this resistance because this candlestick, or this order block rather, because this candlestick right here had already filled in this gap. It came right back up, met to this area, and then started the other sell-off, right? Y'all see that?
Yeah.
So then what we ended up doing was when it created this sell-off right here, we had now got point A to point B for the downtrend, right? You do not have a downtrend until you get a point A to point B. That's the only way you can have a valid downtrend. So on a major time frame, some people may consider this point A right here to point B right here on a daily time frame, right? So then let's go back down to the 1 hour. Oh, I'm trying to do that. All right. So now we got our point A to point B for the downtrend. Now we know the market is in a downtrend market, right? we now know that we're in a trending market. Even though the market looked like it was creating higher highs and higher lows over here, it ended up now breaking that uptrend, which was, I'll mark it up so y'all can see it visually, which was pretty much like right here. Ended up breaking that downtrend, that uptrend, created a lower high right here, then went on to create a lower low, lower high at our point B, lower low, lower high. Y'all see how how the market started to form into a downtrend?
Mm-hmm.
From point A to point B, and then point C right here, which I'm gonna get into in a little bit. But first, I want to go over this first trade right here. So, also at the beginning of the week, I said I was going to go for smaller pips for my TPs. And reason as to why, because, well, for one, I was kind of testing something out. But sometimes, especially with 30, you really don't need a big move. You know what I'm saying? With 30, you don't need a really big move, honestly. So I actually ended up kind of getting lucky on this, because at first I was shooting for this low right here. But let me tell y'all something that I noticed. So we kind of have two blocks right here. We got the first one right here, and then the second one right here. Do y'all see what is going on to the right of the market? When it first hit this order block right here, the market rejected, right? So
Yeah.
I started to notice the wick rejections in these two candles. Then it went down again, and it started to come back up a little bit, and that was when I pulled out. As soon as this candle started to form a little bit, and it rejected off of these wicks, or it didn't want to go below these wicks after this candlestick right here, that was when I ended up pulling out. So that was more so me recognizing where I was in the market and seeing that the market was rejecting off of this area right here. Then,
Hey, quick question.
yo, what's up?
Is this the current market, or like this is like when is this from?
This was on this one was on Monday. Yep, we're looking at Monday market right now.
You said Monday. Monday, what day was it? What's today? Friday?
Yep, that was on July the 11th. So this was like right in the morning of Monday, because I remember it hit my TP like before work even started, because I was at work at the time, and I had entered this trade as soon as I had woke up and saw where the market was, because I had an alert set right here at first, but I removed it, or actually I moved it up to right here, but I had an alert set at first. But yeah, this is where I ended up entering the market on Monday, and we had hit TP. So I was just going over that trade right there.
It's like on mine, like I got it marked up, but it's like I didn't have it. I wasn't looking at the market right there. So I ain't have a, because I can see it's like a minor support right there.
Yeah, it's a minor support. So that's what I was talking about with recognizing where you're at, because I was looking at the rejection on a major scale, like on a major time frame on a 1 hour. Yeah. But we act like I was just saying, we found this order block on a 15-minute time frame. So that minor difference between major structure and minor structure is the major difference in a trade. Because if I would have just been focused on a major structure, I would have missed this order block. I would have continued to hold this trade, and it never would have hit my TP down here. It would have ended up rejecting right here and coming back to knock me out at break even.
Yep.
But because we switched to the minor time frames and tried to recognize if there was other supports at smaller time frames, then that was how I was able to recognize this and see what was going on in the market. So I just went ahead and pulled. So it's very important that you use all time frames. Do not just get stuck on one time frame and try to, base a trade off of that. Yes, it's good to recognize the difference between major and minor support. But you got to think of it just like real life, right? Seconds make up minutes, minutes make up hours, hours make up days, days make up weeks. It's the same thing with these charts. 1 minute make up 5 minutes, 5 minutes make up 15 minutes, 15 minutes make up 30 minutes, on to the 4 hour or the daily, depending on what type of trader you are. It makes sense? So that's basically how I was able to recognize when to get out of that trade by just using the other time frames and paying attention to that and recognizing the structure on the minor time frames. Because we was taking this long buy right here, like this was about a 30-minute to a 1 hour trade, but other people was probably scalping this short-term buy right here. You know what I'm saying? It were probably buyers in this part of the market, which obviously it was because it ended up pushing the market back up here. So you gotta know who you're competing with, and when to get out of a trade, when to get into a trade, and things like that. So that was that short-term sale. That was why I ended up hopping out of the trade early and just taking what I had got. I was satisfied with the profits that I had got out of it. I did expect for the long-term sale to start right here, but once I realized that it wasn't, and I even thought about hopping back in right here because of these wick rejections, right? We ended up getting really strong wick rejections here, but look at the candlesticks that were forming right after the wick rejection. We get a bearish engulfing, then we get a bullish engulfing, then we get a bearish engulfing, then we get a bullish engulfing. So obviously buyers and sellers are fighting for control right here. They're fighting for control. And yes, you could have traded this little zone back and forth. You could have kept on trading this little zone right here, but I ain't gonna lie, you would have had to been sitting at your computer for like the whole time, trading this little zone. Back and forth, back and forth. But once I realized that buyers had ended up winning and took control, because I wasn't gonna hop in for another sale until it had broke this support right here. It would have needed to break this support in order for me to hop in for another sale and know that sellers had won this trade. Won this battle right here between buyers and sellers. But once they had broke above, then that was when I just stopped looking at the market. I ain't gonna lie, I just stopped looking because I just let it do what it do. And then after that, that was when this big sale had happened. So once I had came back and saw this, I'm not gonna lie, I thought I had missed the whole big sale that I was looking for that whole week. Like I was saying, I thought the big sale was gonna happen right here and it was gonna sell off a lot, but it ended up coming up and then sold off from up here. But let's look. How could we have known that the market was gonna come up here? Remember, right at the beginning, I talked about this gap right here. So the market did come up and kind of filled it in, right? But look at where this came to. It came right to the bottom of this candlestick right here. Literally, right to the bottom of this candlestick. and filled in that gap completely. So right here, it kind of filled it in, but it came and filled it all the way in with these wicks right here. And like, let me show y'all. They go to the 1 minute so y'all can see even more clear. I wonder if it's gonna let me go all the way back. All right, bet. Yep, there we go. So y'all see that the top over here came and tapped perfectly to the bottom over here and filled in this gap all the way. So a lot of people wonder, okay, how do I know where the market is going to move to? Just because it broke above here, you could have took this buy right here, honestly. As soon as it broke back above this zone, and I'm pretty sure it was an impulsive buy. It was. Once we saw this impulsive candle, we got the retest right here on the 1 minute. That would have been your entry. Boom, right here on the retest. Or you could have waited to see if it would want to retest and reject. All right, perfect. What do we see here? We got a doji, bullish, engulfing. Perfect. Enter right here at the opening of this candlestick and trade it right there to where it filled in that gap. You could set your stop loss a little bit outside of the retest. Make it a 2-to-1 zone. I promise I ain't trying to show y'all my wallpaper. It keep on going to it. And then, boom, that's your trade right there.
You ever enter in on a 1 minute?
Yes.
When you trade like 30 though?
Yes. Yeah, 30. If I'm sitting at my laptop, usually on Thursday and Friday mornings, I'm trading 30 on a 1 minute. From 1 minute to 5 minutes to 15 minutes.
But what do you do your markup on?
I do my markup. So on 30, I do it from 30 minutes to an hour.
You do a 30 minutes to an hour markup.
Yep. Because I want to realize where I'm at on major structure. I'm a zone-to-zone trader on 30, or really indices, period. Yeah. I like to trade zone-to-zone. So I realize my major zones on a 1 minute. I mean, not 1 minute, but 1 hour, sometimes even 4 hours, to see other things as well. But I enter, truth be told, I enter sometimes on a 15 minute or the 1 minute. Because so far, we basted 2 trades. Well, we got 2 trades so far. One off of the break and retest. Boom. I entered this one because we ended up getting lower highs. So this was a high right here, lower high, or it kind of matched up evenly with this high. But once you saw that it did not break above this high, boom, you enter. There go your trade right there. Then this trade right here, like we just went over, it broke above this resistance right here, came back and retested it right down here perfectly. And then you either could have entered right there on the retest, or you could have waited for your bullish engulfing candle. And then no matter what, you would have had 0 drawdown, whether you entered on the opening of this candle or right here perfectly at the retest. You would have had 0 drawdown. And then, like I said, your target would have been to fill in this gap right here. So once it came in, or once you see that it's a gap to the left, that would have been your target. And it came up and tapped it perfectly. Or you could have set it a little bit lower than the gap just to be safe.
Yeah, I was gonna say I usually, like, if I have a target, I'll put it like, depending on what it is. Like, so US30, I'll do it like probably like 20 pips below my actual target.
Yep, that's good. It's good to be safe. because sometimes it don't always go right there to the top of the previous high or previous low.
Yeah.
Sometimes it falls just a little bit short, just like it did right here. It fell just a little bit short, well, not a little bit, a lot short from where my TP was, but we was able to recognize that and we hopped out of the market.
Yeah.
So I just wanted to do a brief recap of Monday's trade, just so y'all can start seeing that y'all sales, recognizing market structure, taking the small profits or the small trades, and then recognizing trades on a smaller time frames and the difference between the major and minor structure. So I'm gonna go over all of these trades, and just to be clear, all of these trades I did take multiple entries on. I took multiple entries on all of these. So as I had pointed out, we had got point A to point B for our downtrend. We had got point A to point B for our downtrend from here to here. So now we're just waiting on point C. So therefore we could get in right there on point C. All right. So just putting everybody in the mindset of where we're at in the market and why we were taking these trades. Right.
Right.
So why I was taking these trades. So market came up, boom, touched the trend line. This is point C right here. I was patient. This is point C. We got the rejection. Perfect. This is perfect. This is exactly what we wanted. All right. The market rejected the way I wanted it to. Now let's try to look for a possible re-entry level for the market. I brought out my field from the previous high on the 1 minute time frame. All right, the market came exactly to the 50. It rejected. Boom. I got here. I got in on this candle. Now, truth be told, I always wait a moment before setting my TP. I mean, my stop loss. I do not set my stop loss as soon as I enter the trade, right?
That makes a lot of sense. Now think about it.
Because you got to understand when the market is being volatile. You got to let it breathe a little bit. Then once it start back moving, then I set my stop loss. Because I understand what it, especially with 30. I understand what is going on. So, like I was saying, it rejected right off of our trend line perfectly. We got multiple wick rejections. It came and grabbed liquidity right here, and then boom, dropped down. Now, could I have entered right here after this candle? Yes, I could have. But I was not on my phone because I was at work, which this would have been my entry right here, truth be told, because this is easily recognizable as a liquidity grab. This is liquidity right here, or this is the liquidity right here. And then boom, it knocked out these sellers who entered right there at the test of the trend line, because institutions know retail traders' mindsets. They know their strategies. So if we saw the trend line form and we knew that this was point C, institutions know that as well. They got more money.
They know them stop losses right there.
Yeah, they know the stop losses are right here. So some people call it a stop hunt. Some people call it a liquidity grab. Both are the same thing. So what institutions did was just stop hunt, knock these people out, tank. Beautiful. You get your entry right here. As soon as you, so let's say you did enter right here, and you think the market is about to go in your favor. Let me tell you why it's not. All right. So what you want to see is a very, very, very strong rejection after the market has hit your level, right? You want to see a strong rejection. So we see a zone start to form right here on the 1 minute. It hit our point, but it did not reject hard enough. And what I mean by strong rejection is what we see right here. This is what I mean by a very strong rejection. This is the type of movement that you want to see once the market hits your the level that you plan on getting in at. That's what you want to see, right? With hence, that's why I entered right here where I did, right? So we get that rejection right here, exactly what we want to see, but we didn't get that right here. Instead, what we got was a lot of consolidation on a 1 minute time frame, which should have been a red flag telling you that the market is not done moving yet. It's not ready to move yet. It is not ready. So once you get this consolidation, that's a red flag that the market is not ready to move yet. And that's how you know that a stop hunt may be coming. So if you do enter right here and you start, let's say you entered right here, right? You entered right here. And you go into profit, you think everything good, and you come back and you see that the market is right here back at entry, or you see that the market is right here near entry again. Once you see these wick rejections, which is exactly why I hopped out of my trade Monday, right? We're kind of seeing the same exact movement, right? We're getting the wick rejections right here. And that's exactly the reason why I hopped out, because the market could have, just like it did, it came right back up. We're seeing the exact type of movement again right here.
Less than or equal to 53.
The same type of movement right here. So once you see that, all right, the market not ready to move yet. Let me go ahead, hop out and take my profit. This is still from our entry.
And this one was
That's still 24 points on US30. That is perfectly fine. I don't care if you're trading a 0.01 lot size. 24 points on a 0.01 lot size, guess what? That's enough. If you got $100 account, that is enough. I promise you it is.
Yeah.
Anything
I've been greedy. I've been real greedy.
I have too, which is why I said Sunday I'm gonna be going for like 25 to 30 pills for the week. That's exactly why I said that for Sunday. So
Man.
once you see that consolidation, recognize that, please. I don't care if it's on a 1 minute or 5 minute. It's good to recognize it on a 1 minute and a 5 minute, because especially if you got your entry off of that time frame, you definitely want to pay attention to that, right? So now let's spread out this zone, right? Let's spread out this zone. Actually, we can spread this one out too. So it grabs liquidity right here and then come right back into this zone. It came right back into the zone right after it grabbed liquidity.
That's the high sensitivity cardiac troponin.
So I'm guessing some people are probably thinking like, bro, this trade just knocked me out and then came right back down. Yes, it did. But does that mean your analysis is wrong? No. Your analysis still correct.
Let's say this.
Right? Your analysis was still perfect. You just had bigger players in the market.
Say 40.
So what's up?
So is liquidity like? Can you see it more clearly on like a smaller time frame, or like how do you?
It depends on what time frame you're trading. So we're going to look at the same market, but let's go up time frames. Let's go to the 5 minute now. We still get liquidity. I mean, we get wick rejection, boom, it knocked out right here. Wick rejection still at the same zone and then drop. Go to the 15-minute. On the 15-minute, if you was entering your trade off of the 15-minute, then you would you still would have entered right after. Let me zoom out a little bit. So we get this bullish engulfing. I want to wait a little bit anyway if I'm entering off the 15-minute, because this is not a strong enough rejection for me off the 15-minute. Because this is too big of a candle for me to look at this and be like, oh, okay, this market about to sell. Especially, what's my rule? A 2 candlestick confirmation. I get this candlestick and then I get a doji right afterwards. Oh, I know this market not gonna sell down yet. Right? We need 2, you want to see 2 bullish engulfing. I mean, bearish engulfing candles. Right after a rejection. So the way that I would have liked for this to look, so we get this bullish engulfing candle, it tests the trend line. I get 3, or actually 1, 2, 3, 4, 5 consecutive bearish engulfing candles. But this is really what you would have wanted to see. These 2 candlesticks right here. These 2 bearish engulfing candles would have confirmed that the market was ready to sell off.
Would you say so? Like with them 2 candles, how far do you want it to like cover?
I want them to cover to at least a half of this big candle right here.
Okay, at least 2 candles, 3 for good measure though.
Yep, it got to at least cover to half of this candle. I would actually like for the first candlestick to cover half of this candle.
Okay.
If you could get that first candlestick after this bullish engulfing candle to cover half of this, oh, you in good hands. You good.
Yeah.
But if you can get 2 of them that covers half of this candle, now only thing is you want to be careful because you don't want it to be just a 50% field retracement, right? So you still want to watch it to that point, but that's what I would just prefer to see, for me to know that that is a strong enough rejection and that sellers are now in the market. That makes sense?
Yeah.
So that's just part of candlestick analysis right there. So now let me get back to why I ended up taking this trade. All right, so we talked about the liquidity grab right here. Perfect. Once you saw that it was just a liquidity grab, you could have entered right here, either at the top of this zone again, or you could have waited for it to break this zone right here, or break the support, and then entered right there on the next candlestick. Once you saw that it broke, boom, your trade is complete. That's another 85 points right there.
Mm-hmm.
Yep. So just like this, we get a bullish candlestick with a long wick coming out of the top. I know that this is going to be a selling market because look at the candlestick right afterwards. We get a bearish engulfing, creates a resistance right here, or you could have got in right here at the top of this bearish engulfing once it came back up to this resistance, and then the market sold off. So that was my problem with this trade right here. I was not patient enough. Yes, I got in after this Fibonacci, but it started to work its way back up. My analysis was still correct, but if I would have been patient a little bit longer, I would have saw that after this wick rejection right here, because it rejected off of the 61.8, we did get a rejection off of the 50% fib level. But what do I say? After it rejects off of the 50% fib level, if it comes down and rejects off of the 25% fib level, it is about to go back up and maybe even higher. And that's exactly what ended up happening. The market ended up coming down, rejecting off of the 25% fib level, right after rejecting off of the 50% fib level. That should have been my sign. Okay, the market is not ready to sell off yet. It's probably about to go up higher, which is exactly what ended up happening with this wick rejection. Then boom, I enter right over here once I see that the market created this resistance right here. So you can even say that this is a liquidity grab. but really this was just a retest of this support right here. Y'all see that?
Okay. Yeah, I was gonna ask about that. I seen the drop off. I was like, but like, what about the retest? And then like with this being a 1 minute, it's so many candles to take into play. Like, I mean, take into consideration.
Yep. But even like, and that's the thing, some people try to read 1 minute candlesticks differently than what they read the 1 hour. It's honestly no different. If you want me to be honest, what do I trade on my major time frames? Break and retest. If I was to be doing that on the minor time frame, I would have won this trade right here because all this was just a break retest. Boom. And then guess what? My fib level still matched up perfectly with the retest at the 61%, 61.8% zone between the 70%, between the 70% and 61.8% fib zone. This is my first buying zone right here. And then this is my discount zone right here. So my problem with that trade was patience, because I could have easily traded the break and retest, patience, and my stop loss being in a terrible spot. So my thing is, once I saw that the market rejected off of this 25% level, right after rejecting off of the 50% fib level, because the thing is, I entered right here on this candlestick. I should have saw that. I should have been more patient instead of thinking, oh crap, it rejected heavy off of this 50% fib level. Let me go ahead and hop in before I miss the sale. Right? That was the mindset. It rejected heavily off of my 50% fib level. The market is about to get ready to sell off. Let me go ahead and hop in before I missed it. But if I would have been just a little bit more patient, I would have saw, oh crap, the market rejected off of the 50% fib level. Oh wait, it rejected off of the 25% level right after that. That is an indication that the market is about to go up higher, more than likely to my 70% fib level. And that's exactly what ended up happening. It ended up coming into this zone and retesting the previous support that it had broke on the 1 minute. And then that was when my sale ended up happening. So patience, one, but two, if I would have just stuck to my rules, because I talk about that literally in my Fibonacci video. And I talked about it again in one of my one-on-one sessions that I had with Keelan. And I think Patrice was in that call too. So it's like sticking to your rules and being patient. That was where I screwed up at on this trade right here. Do that make sense? Or did I run through that kind of fast, too fast?
Nah, you good on this end, huh?
Everybody else good on that?
Yes.
All good.
After losing this sale right here, I'm like, okay, I know the market is about to sell, bro. I know a big sell-off is about to come, right? I'm so eager to catch this major sell-off, which did end up happening, but I end up taking myself out of the game before the sell-off happened. And this is why. So after losing this sale right here, I was anticipating the big sell-off, right? I was like, okay, it rejected off of the trend line, right? I got my confirmations. I know the sale is about to come. That's about to be over 2,000 points. So let me get ready and get my best entry that I can get, right? I'm looking at the 1 minute time frames, but this is the problem. The first time I lost, okay, I became patient. I waited for the 1 hour candlestick to close. So once I saw that the 1 hour candlestick closed below the trend line, I was like, okay, that's a confirmation right there. So I tried to implement last week's lessons to this week, right? Last week, I did not look at the major time frame, and I ended up messing up, right? I ended up messing up because I was not looking at the bigger picture. So once we got this big wick rejection right here, this is where the liquidity grab was. This is where the next candlestick ended up opening, or no, right here. This is where the next 1 hour candlestick ended up opening. So I took an entry right here. Again, once I saw this major wick rejection on a 1 hour time frame, I took another entry right here at the opening of this candlestick, but we're going to get to that right there. So basically, I'm just showing like, okay, I tried to implement last week lessons, but let me show why last week lesson did not work and why there's a new lesson every single week and you need to adjust to the market. Yes, it's good to learn from your past mistakes, but you still have to recognize what is going on in the market and if that lesson even applies in the current day situation. So last week, I was not patient and I did not look at the bigger picture. This week, I was patient, this week I looked at the bigger picture, but I was not patient. Because if I was, I would have saw that all this was, or I wouldn't have taken these sales right here. And why wouldn't I have taken these sales? Because this is a resistance right here. It broke above that resistance and it came back and retested it right here. So, question, why am I taking sales right here at the resistance that it just broke after clearly seeing that the market is just retesting this resistance and is now becoming a support? Why am I still looking at sales? Because I'm not adjusting to the market and what is going on right now. I'm still looking to the future. I'm looking too far to the future instead of paying attention to what is going on right now. And I'm trying to catch the big move before it happens. But the big move is not ready yet because if I pay attention to price action, the market has now created a higher high and it is now creating higher lows. Right?
Facts.
This is why minor structure, minor time frames are very, very, very important. Because like I said, I went to the 1 hour and saw that we had got the wick rejection on the 1 hour when that 1 hour candlestick closed, and I just entered. Right? I was too eager to catch that entry once I saw the wick rejection on the 1 hour candlestick. So then we go down to the 1 minute and then we see why that wasn't a good trade. So at this point, I'm just taking entry after entry. And then I see, okay, I finally started to recognize that this was just a retest of the previous resistance that had now become a support. And if I would have been more patient, I could have avoided these two losses right here. And I could have took this sell right here and boom, made my TP to right here. Guess what? This is a 40-point trade, 46-point trade, nearly a 50-point trade. So I could have caught a win, right? I could have caught a win because regardless, that big sell was not going to happen until it broke this trend. So that is how I could have avoided these two losses, and that's how patience played a part in Tuesday market, because it's all about taking yourself outside of the market for a second, or taking yourself outside of the moment, right? Yes, it's good to know what's going to happen, but it's even more important to pay attention to what is happening in the market right now. Trade what you see, not what you think. I wasn't trading what I was seeing right here, because if I was trading what I was seeing, I would have saw this. All right.
Mm,
So
I'm with you.
let me erase. Now let me get rid of those two. So then we get to this sell-off right here. And of course, I'm still in my big sell-off mindset, right? I'm in the major sell-off mindset. I'm like, oh crap, this market is about to sell off like crazy now, right? And it came back and retested the trend line again. This time, I'm like, okay, I couldn't catch the entry at the top of the trend over here. I'm gonna try to catch the entry right here off the retest. So that's why I entered in the middle of this candlestick, because as soon as I saw that this as soon as I saw that this candlestick had closed right here at the trend, we got this wick rejection, and the market was looking like it was about to turn into a bearish candle. I ended up entering right there in the middle of the candle. And then, yes, the market did sell off. But like I said, I did not recognize that this was a resistance that had now become a support. So I was still looking at the bigger picture and trying to take the big sale instead of taking this small win right here. And I held it. And then the market came back up to break even and knocked me out. So that's another trade I could have won, and I could have avoided these two. Could have still been in profit for my account. I could have flipped my account right there on that account, on this trade right here. Because before now, or before I took these trades this day right here, I was 4-0. Actually, if I take into account every single entry that I took, I was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. I was 11-1 on my trades with all the entries that I took. But I took 4 trades total. GJ, EJ, and then US30. No, I took 3 trades total. GJ, EJ, and US30. So I was 11-1 on just 3 trades. So before today, I was very close to flipping my account. And if I would have just been paying attention to the market, that would have been another account that was flipped right there. But instead, I got too ahead of myself. So that was why I ended up breaking even on this trade, just looking at the bigger picture instead of recognizing structure on the minor time frames. So boom, that's that trade right there. And then it came back up here again. It rejected. It ended up falling a little bit shorter than this high right here. Same confirmations that I usually try to look for, right? It's nothing different from the typical analysis that I try to look for, just to be honest. But that doesn't mean that it's always going to work out. So I took another entry right here, and we did go in profit. And yes, I could have even again got out at the same exact point. It came back up. It created a minor zone right here from this resistance to this support. It's a wick rejection right here. This wick rejection right here. It came right back down to this support. Again, could have won 2 trades right there if I would have just been trading them to the same exact level. Y'all see how easy it is to see this stuff right afterwards?
Yeah. When you get a chance, look at my text message.
All right, bet. I'm about to get to it very soon. I'm about done. But like just seeing this stuff afterwards is like, dang, this is actually very noticeable. Why didn't I see this when it was going on in the moment? Because you're too into the moment. You're too into the moment. Take a step back.
Why does it feel like deja vu?
It probably is.
This feel like you said the same exact thing, and I missed it. That's crazy.
Because we repeat the same mistakes. Even me, I don't learn from my mistakes enough. I continue to repeat the same mistakes week after week after week. But the reason that I continue to do what I do is because I know that a lot of beginner traders are in that same stage, or some people who even been trading for a year or 2 are still in that same stage. and this is great knowledge for them to learn. I want y'all to learn this stuff in the beginning instead of just learning this stuff 2 years in. I was on a Zoom call with a guy who had been trading for 4 years. And he was like, bruh, you're learning stuff just a year in that I didn't learn until 3 years in. I don't want to be that guy. I'm not going to lie to you. I don't want to be 4 years in and still in the same position as I was in on year one. I got places I'm trying to get to. I ain't gonna lie. But I do understand I'm not on my timing. I'm on God's timing.
That part.
So, the market, I could have simply just started taking buys instead of sales, or I could have took those sales to this target right here of this support, and then I could have been done with my day. Or I could have been taking buys from this support back up, and I would have hit big. It is what it is. The market also ended up creating another resistance right here. Right? Well, I actually marking it up. I'll turn it into a zone. So this time, I made even dumber mistakes. Why? Because after I took these losses right here, I'm like, bro, I'm just gonna step back. I'm just gonna, let me close my phone real quick. Let me close my phone. Let me get back to work. I'm not gonna trade for a second. Let me catch my breath. Let me be all right. Then I get back to my phone over here where I took these trades, and now I'm like, dang, the market sold off like crazy after it rejected off of my 70% fib level. This very skinny black line right here. Y'all see that?
Mm-hmm.
That's my 70% fib level, right? So like on a 15-minute time frame and stuff like that, this is just a wick rejection off the 70% fib level. So I'm like, dang, all it did was just go up to my 70% fib level and reject off of that instead, right? But I was like, okay, that's my confirmation right there. The market is about to finally sell off big. Wrong. Where did I enter this sale? I entered into this sale as it was entering the support zone that ended up forming right here. So again, I'm entering at terrible spots. Now, the reason I entered right here was simply because I did not look to the left of me. If I would have looked to the left, I would have saw, oh, this is a support. No, let me wait for a second. Let me mark up my field. Boom. Let me wait on a retracement to come up right here. Right? That's what I normally would have done. But instead, I got FOMO, and I was like, nah, the sell-off gonna happen right now. I can't miss this jump. I've been waiting on this jump for 3 days.
Yeah, that's the same thing that happened to me.
I'm like, I've been waiting on this sell-off for 3 days. I'm not gonna miss this sell-off. I entered right here, literally at the support zone, and it instantly went up and hit my stop loss. So that was why I lost that trade. I wasn't patient and I got FOMO. If I was patient and when I would have did my analysis as I was supposed to before entering the trade, I would have saw, oh, this is in a support level. Let me wait until they break past this zone and then I will enter. And then I ended up entering again right here at the same exact level. I had broke even right here. And then once I saw, okay, it's rejecting off of this right here, maybe it's finna sell off now. I got these two tweezer tops right here off of this minor resistance right here. And then I entered right here at the opening of this candlestick. I was like, okay, the market about to sell off now. Once I saw this to the top, I was like, okay, the market about to sell off, is about to break past the support. Let me catch the early entry. Wrong again. But this time I was kind of fed up. I ain't gonna lie to y'all. I was fed up because I'm like, bro, I know the sell-off is about to happen. what is going on? Why am I losing? But now we're looking at why I'm losing. We're seeing why I'm losing. And it's very stupid mistakes, all because I wasn't patient. If I was patient, we see 2 trades that I would have won and 2 trades that I could have avoided taking. And I would have flipped my account. And y'all know once I flip my account, I take a break anyway. As soon as I flip my account, I take a break. I get my withdrawal. Once my withdrawal go through, then I go through and start back trading again. And by the time my withdrawal would have went through, because it was during a weekday, so it would have went through pretty fast, I probably would have been able to catch this big sale right here. But instead, I kept getting FOMO. I kept getting irritation. So I was like, okay, maybe I need to make my stop loss bigger, right? Maybe I need to make my stop loss bigger. And that is a huge mistake. Never tell yourself that. I was like, okay, let me set it a little bit outside of the previous high. But I was like, okay, if it come up to this previous high right here, I know that the market is gonna sell off then. So for one, I wasn't paying attention to my account, and then I took too many positions. I was not paying attention to my margin level. So that's a mistake on my part, a mistake that's very easy to make because you do not understand the lot sizes that you are popping, and simple stuff like that. That's why it's very important to understand your lot sizes with the account that you have. So I was thinking, okay, if the market do come up here and hit my stop loss, then it's going to be right here at this resistance right here. And then I could just enter right here at the resistance if it do come up and hit my stop loss. But if it don't come up and hit my stop loss, then that means the market is ready to sell off and then it's about to go in my direction finally. Right? So again, I'm still stuck on the sale. I'm still stuck on the future instead of paying attention to the now. Because I easily, instead of taking this risk right here, what's the smarter decision? Why not take a buy right here at the support, trade it up to this resistance, and then take the sale? Why not do that? Because I was trying to leverage too many positions and I was trying to maximize my profits by taking a filler and then taking my bigger positions right here. But instead of taking a filler, I took something a little bit bigger than a filler. You know what I'm saying? Let's just say that. So ended up taking me out the game. And then I never was able to cop the entry that I would have liked to cop right here once it got to that resistance right here. And then if I did catch that entry, like I planned on doing, and let's just pick a TP, right? Let's just pick a TP. Let's go all the way down here. Let's go all the way down here to this biggest support level right here, right? Let's just say I decided to hold this sale for the whole entire day. Look at this.
Ooh.
Boom, TP hit right here. And that's in a matter of that's in a matter of 3 hours. So y'all see how easy it is to make these mistakes and how just being patient is the most important thing. Patience pays.